Jared and I have done this webinar presentation quite a few years now, right, Jared? So things change and we kind of go back through and update stuff. It's a lot of different things this year, so there are kind of nuanced things. So we'll go through all of those. Again, I'm Ben Peeler. I'm the partner in charge of our tax controversy services. So I get involved a lot when we're having conflicts with the IRS and we're trying to resolve them or dispute them. And then Jared, of course, handles all the submissions and the compliance. So, I mean, he can introduce himself a little bit more if you want to.
Yeah. Thanks, Ben. I'm Jared Johnson. I'm part of our international tax team. I lead our group on individuals with cross-border issues. So this issue comes up quite a lot on international issues. And so, I've been doing this I've been here at iBailey for about 8 years doing this kind of work. And so.
Yep. So we work together on these. I'm an attorney by training. I'm a former IRS attorney. So a lot of my experience in this comes from behind the scenes, and we try to use that to help our clients. So what we're going to present today, these are our learning objectives. We're trying to give you some value added here so you can have some useful information, things you can pass on to others too. But we're going to talk just basically about what is out there and what the IRS requires, and then review some of the particular forms. We think that's important because that's a lot of what people ask, is they don't know what, there's some tricky issues as to whether something's required or not, and some legal analysis that usually has to be done. And then we'll kind of go through how the IRS goes after people and what can you do about it, and just options that people might have. So we'll start off. If we can, I'll hand it off over to Jared and he can talk about some of the forms.
All right, great. So looking at this slide, you can see that the US or the IRS has a lot of international forms, and a lot of them are informational forms. A lot of them now have changed from informational forms to forms that calculate income and tax on certain line items. So these forms over the years have kind of transitioned a little bit. So a lot of people wonder why the US would require so many different international forms and returns and information. And really, what I tell people is the US government really requires a lot of these forms as a means to combat financial crimes such as money laundering, tax evasion, support of terror. And so the rules and laws around these forms are really have a lot of teeth in these laws, and so there are significant penalties, which we'll get into a little bit later on each of these. But probably the most common one of these forms that are out there that most people have heard about is FinCEN Form 114, which is better known as an Fbar, or foreign bank account reporting. I'll go over the details of that one just on the next slide, but that's the one that's out there that a lot of people know about. So it gets filed with the US Department of Treasury instead of with the IRS. And so it's a separate filing that gets filed with your 1040 tax return or whatever form you're filing. If you're a corporation and you have an Fbar, it gets filed separately. But it goes to the Department of Treasury instead of the IRS. There is an IRS sister form to the 114, and it's called an 8938. It's a specified foreign financial asset statement. And you report a lot of the same information, but they have different filing thresholds and different things like that. But you're listing out foreign assets. Purely informational in nature, both of these top two. Forms 3520, 3520As are international forms where people use to report foreign trusts and receipt of gifts from foreign persons or foreign gifts. And this is kind of a complex area and an area where the IRS has had a campaign to issue a lot of notices as of over the last few years in this particular area. Form 8865 is a form for foreign partnerships that are required. So if you have ownership in a foreign partnership, you may have this filing obligation to report. And similar to like a a domestic partnership that produces K1 statements, this foreign partnership could create like a similar to a K1 that has flow through aspects to your US tax returns. You have 5471. This is another very common form now that the world is becoming smaller. We have more and more people that are doing businesses and they're establishing companies overseas. And so the IRS this used to be purely an an informational form. And then when TCJA came, when President Trump passed the TCJA Act or enacted that law, this whole dynamic of 5471 changed. It become income reporting. If you don't report a 5471, you very well could have unreported income and would therefore require some of these amnesty programs we're going to talk about today. Form 8858 is a form for disregarded entities, foreign disregarded entities. And then 8621 is a form that is for passive foreign investment companies or reporting of a passive. So that's kind of interesting. So passive foreign companies or investment companies have an 8621 that has certain taxation aspects to it. It's kind of a punitive tax. And
more commonly known as PFIX, right?
Yeah, PFIX. Yep. And a lot of people think, well, I don't own a foreign passive company, so I don't have to worry about this. This could mean like if you have a brokerage account in a foreign country that has you're invested in mutual funds through this foreign broker, you have PFIX. And a lot of people don't realize that. If you have a retirement plan in a foreign country, so if you worked in a foreign country and they set you up on a pension in that foreign country, you very well could have PFIC reporting. Anyway, so there's this is kind of really a tricky area, but anyways, let's go on next slide then. So a lot of people ask me, well, when did the Fbar form kind of come along? And a lot of people don't realize that the requirement to report foreign bank accounts originated with the Bank Secrecy Act of 1970. Now, it didn't get a lot of traction back that long ago. Really, when it got a lot of traction is when the IRS put the kind of the teeth in laws, kind of as I was explaining earlier, where they issued a lot of civil penalties, which began in the Job Creation Act of 2004. And so these civil penalties are there for failure to file. So what is a FinCEN Form 114? It is the Fbar form. And you basically have to file this form if you have an aggregate maximum balance of foreign bank accounts that exceeds $10,000 in a calendar year. So I like to explain that if you have two bank accounts that have $7,000 in each of those accounts, you have to disclose the existence of both of those accounts on this FinCEN Form 114. So it's the accounts in aggregate, not just like, oh, this one didn't ever exceed $10,000. The other thing you got to factor in is even if the account exceeded $10,000 on a given day, just one day, you would have a FBAR filing obligation. A few years ago, FinCEN Form 114 changed its filing deadline. It used to have a June 30th filing deadline. It is now April 15th each year, which is really funny. They say it's April 15th, but there's an automatic 6-month extension through October 15th of every year. So really, your filing deadline is October 15th every year, because you don't have to file extensions for the FinCEN Form 114. It's just an automatic 6-month extension. So the other thing that changes, these forms used to be able to be paper filed. You can no longer paper file, and they're required to be e-filed each and every year. So that's probably a little bit more than any of you ever wanted to know about FBARs, but it is becoming so, I talked about this a little bit earlier. The world is becoming so small. More and more people are investing or doing business overseas. And I will bring up one other thing here too, that I forgot to mention, but more and more of these accounts are people are opening bank accounts because they have to do business, or they have a personal bank account. They have to do business, so they have to have these bank accounts. So this is very, very common. The other thing I want to mention here is, even if you have, so generally it's if you have a ownership in a foreign bank account that you have this filing obligation. And that is if you have a financial interest in that account, meaning you own the account, or you have signature authority over an account. So businesses have FBAR filing obligations if they own accounts. Executives of businesses or people that business grants a signature authority over that business account also has to disclose on their personal FBAR their signature authority over that corporate account. And that's something that can very easily get missed as a business. So each year, if you're a business and you have foreign bank accounts, you should be identifying the people in your organization that has signature authority over those accounts and making sure they have the information necessary to file their FBAR account, or they could be subject to these penalties. So that's something I want to bring up because that's something that very easily gets missed. So that leads us to our polling question.
So just a couple interesting things about that. That's the FBAR is different because it's based in a different set of statutes. It doesn't come from the Internal Revenue Code, and so it has its own sort of enforcement regime. But then the IRS is tasked with enforcing it. So that's kind of a nuance there. But here's the polling question. So hopefully everybody gets that going. And I would also note that with those FBARs, like Jared said, it's very common for people not to realize that they could be missing one. They just have signature authority and then they have to file it. That's really common for us to run into people that have that problem, didn't realize that they needed to, and maybe even, maybe other people in the entity do, but you have to all you have to do is have that signature authority. So then, have you ever had a foreign bank account reporting obligation? Looks like no, 67%, yes, 23%. And some said, what is an FBAR? So
I would say, Ben, probably about 10 years ago, that first one would have been like 5% or less. And this is becoming more and more common. Anyway.
Yeah, and $10,000 is becoming less and less of a big threshold. So that's just the way it's working. But oh, and I guess we should note, and I'll note this too here, that has its own set of statute of limitations and everything too. The FBAR does. So.
Yeah.
So what we like to talk about a little bit, is how this all works with the IRS. And I'd like to note though that it's kind of changing. So a lot of our presentation is based on what we think would be the normal IRS, the way the IRS would go after these things or enforce the penalties and things. through COVID, it definitely changed there's kind of two ways that we used to see audits. One was just as part of a direct income tax audit or an otherwise an international tax audit. But we've seen a lot less of those over COVID. The IRS is understaffed still. You might have heard in the news the bill passed and they're going to get a lot of money, but it's a problem that there's probably not a lot of people reviewing these, and so they're just not getting flagged. So a lot of people just haven't been, hasn't hit their radar, but it will soon. It might take a few years for the IRS to catch back up, but so it definitely is, they're kind of behind, but I think it'll get back to at least where it was a couple of years ago. And Jared and I used to see quite a few examinations that might have just be a regular income tax examination, but they would pick up the Fbar. They have to do certain procedures, or any other international reporting, and start to make some noise. Got to remember that in this process, the IRS, they do have a lot of tools, and one tool that we didn't talk about much in the past, but I think is becoming more prevalent, is sort of this big data that they talk about, where the IRS, being understaffed, has realized that, well, we need to go start gathering information from foreign countries, matching it up with what we have to find these people. Now, they've done this significantly with cryptocurrency, and that has triggered some of these, cryptocurrency can trigger a lot of these foreign reporting requirements in certain circumstances. So people have to be careful about that, but they're matching the data from stored in foreign banks or foreign databases with information that they have, and saying, well, hey, this person we're matching up a name, this person hasn't reported something. So those processes might be more prevalent. So a little bit about, and the IRS still has campaigns and task force to address specific abuses. So when I was with the IRS, it was the offshore credit card program, which a lot of people had stuffed a bunch of money offshore, and then they would repatriate it, just buy things with a credit card, and didn't report any of the activity that went on there or the income. So anyway, that the IRS still initiates those. We just haven't seen as much, probably because they're understaffed. But when you do get an examination, and we'll talk about this more, but the big thing is about whether or not, and a lot of our examinations now are just because Jared and I submitted a disclosure, or through one of the Streamlined processes, we've submitted late filings, and we've explained it, and so they're picking it up. And what they try to determine is whether that person was non-willful or willful, whether they kind of and there's some nuances to that, but one of the most important things is this is ripening, I would say. 10, 15 years ago, there was a little bit more leeway, but now the agents tend to say, well, everybody knows about this. At least they do, and we do, but not everybody does. But there's assumption that people have heard about it on the news and things, and so it's a ripening of that, where they think, well, there's less excuses for not knowing or not looking into it. And so that not looking into it becomes a whole different process, and we can talk about that more later. But the IRS will use summonses. They'll issue those to foreign banks, and really they don't issue to the foreign bank. They get a local branch, and they get records from there of a foreign bank that you might have. They do John Doe summonses, where they go to banks and try to find that information. So a little bit about the statute of limitations. So normally, everything just runs on the normal statute of limitations, which is under section 6501. But in 2010, the IRS got more teeth in their enforcement, and basically you can the law changed, added something to 6501 that basically says, it's a C8 specifically, that says if you don't report material information, or you don't file it at all, then there's a longer statute. And so you have to be careful of that. And of course, we mentioned Fbars have a different statute. They just have a 6-year statute anyway. But you have to be careful with this, because it's the underreporting, not reporting. You might even file your 5471 or 5472, but if it doesn't have what they deem to be the correct amount of information, they may assert penalties. And so what I was talking about those changes, that's section 6501C8 changed. So has to be substantially complete for the statute to start running, and that can mean different things. So moving on, there's a lot of different ways that the IRS kind of goes after things. Like one thing we talk about is when you initiate an audit, the IRS, a lot of clients don't like it. Like what they do, the IRS goes through everything, right? Not just bank accounts, but bankage and brokerage accounts are the obvious things, but they're going to check entities, see if you had signature authority. They're looking for real estate that you have, and that might have triggered a filing requirement. A lot of times there's payments that go through it, rent, lots of different things that get triggered. Precious metals, jewelry, art. They'll even pull what we call a text report, which is basically seeing where you travel. If they get really into it, they can look at that and can trigger other things, right, Jared? Especially if they're not a citizen, and different things can happen. So
Yeah.
And they will also interview your return preparer, because the biggest thing that they're trying to determine is what you told them, what you knew, because they're trying to figure out if you were being willful or not. So now the strange thing is with FBARs, there's a 2-year collection statute. So it's a little bit, since it has its own statute, it has its own provisions, can't be collected the normal way, but it can be taken against other taxes or refunds. So
yeah, Ben, on the, questioning tax preparers and what they know. Also regarding the FBAR, as I've heard right from the IRS, people that enforce these rules and laws, they'll a lot of times pull, when you open a bank account in a foreign country, that banker in that foreign country has banknotes. They'll pull those banknotes and review the conversation you had with that banker to help them determine willfulness. And so there's a lot of things that they'll pull to try to determine, especially when you start getting that willful versus non-willful.
Yeah, and a lot of people think that's hard to access information, but I used to use what we call liaisons in foreign countries. So the IRS doesn't have the power to just pull bank records in a foreign country. We used to try to go to a local branch, a US branch, but we would use the liaisons, and those are IRS personnel that are in US embassies in foreign countries. And then they would go talk to the taxing authorities in the other country to ask them to ask for records. And so we would obtain information that way. So, and that's how you get the banknotes. So on to the penalties there for Jared.
Yeah. So you can see from this slide that why there's such a big deal as filing these forms, even when the forms are maybe informational in nature. You can kind of see the level of civil penalties that can be assessed. And then the other thing to keep in mind is a lot of these forms, or most of these forms, also carry with them potential criminal penalties or sanctions. So there is a regarding the FBAR penalty, and specifically regarding the $10,000 penalty, there is something that's kind of in the news going on right now. Is the Fifth Circuit Court? There's a case Bittner versus the U.S. That the Fifth Circuit Court issued a decision that they determined that this $10,000 penalty would be assessed on a per account basis rather than on a per filing basis. And the U.S. Supreme Court has picked this decision up, and they're reviewing it. And as of this past summer, so this is something that we'll want to pay attention, because this Bittner U.S. case, it was a potential he would owe, I think it was $2.7 million in non-willful penalties, because he had so many of these accounts. And if they are assessing on a per account rather than a per filing, the case would have been a $2.7 million penalty versus a $50,000 penalty if they assess it on a per filing basis. So this is kind of a really big deal out there that we're waiting on a decision from.
Yeah, so the taxpayer lost, but won.
Yeah.
A little bit.
Yeah. So these are some of the other penalties that are out there regarding the other international forms out there, and these we'll just for sake of time, I think we'll go right on to the so here are the other penalties. I guess one other thing to note is the 8621. There's no, all these other forms carry with them civil penalties. The 8621 or the PFIC form does not. However, the failure to file an 8621 form carries with it an unlimited statute of limitations type. I don't know if you want to call that a penalty, but it kind of is. So as long as you don't file the 8621, and you should have, technically your statute of limitation remains open. Let's go on to the polling question. And there was also recent news as you guys are answering this. There's recent news out there just the last couple of days regarding abatement of some of these international penalties. Ben, do you want to talk about that a little bit?
Yeah, so the IRS issued a notice. So one thing that's happened because of COVID, we've been inundated with penalty notices, and we've had to go in and ask for the IRS to do their job and consider whether the penalty should actually apply. They've sort of defaulted to letting the computer just assert all the penalties. Well, they must have been equally frustrated with the process. So they've come out and said that, well, penalties during specifically 2019 and 2020, and this isn't just international penalties, but it does include some international penalties and a lot of basic filing penalties. The IRS is just going to automatically abate them. So this it includes, which is a big deal for us, penalties under 6038 and 6038A and C and F. So those are a lot of information return filing penalties. The 5471s, the 5472s, and the 3520s and the 3520As all fall under this, and 6698, which is S corps and stuff, and other penalties. So there's a lot of penalties fall under it. So basically, it should be automatic if you file before September. In most cases, it's going to be September 30th, 2022, but there's some that in like 2019 that if you filed before August 1st, 2021, we can get automatic relief. So we won't go into all those details, but it is kind of something to think about. It's new, brand new yesterday. So
yeah, that was great news when I heard that. We Ben and I have actually working on a case with one of these delinquent reportings, and the agent actually told me, hey, you might want, this was back in the springtime, he says, hey, you might want to wait a little while before you schedule our appeals conference, because there might be some news that's coming out from the IRS. And
took a lot longer to come out.
Yeah, it took a lot longer than he anticipated, but I think he saw this coming and he was quite excited about it. And we went and moved forward with our appeals conference, but it's been silence on his end since we've had our appeals conference. There hasn't been a decision. So I think he was just waiting for this to come out. And so, which was kind of interesting.
We'll see how really automatic this actually is.
Yeah. So anyways, really exciting news. So I think, I don't know if all of you saw that, but yes, the IRS can, 83% of you said that you can have criminal charges brought against you for failure, failure to file an Fbar. So let's move on then to international disclosure form and risk mitigation. So let's go to this slide. So what do you do like if you have a filing obligation, report some of these forms and you have not, how do you minimize these penalties that are out there? A lot of people are like that I talk to on a regular basis. Well, if I start filing these forms, am I just opening up Pandora's box where the IRS is going to come back and assess me and just throw the book at me? And these penalties, the IRS has made it very clear that these penalties are not out there to deter people from filing complete and accurate returns from an international perspective. They want to encourage people to come forward, and they don't want these penalties really to be, in the Pandora box of like, how many years back are they going to nail me with if I haven't been filing these? They don't want that to be a factor in somebody deciding whether they should report and come clean. So what have they done? The IRS has come out with various ways to mitigate or minimize the risk of these penalties. And so they've opened up several voluntary disclosure programs or amnesty programs, or however you want to say it. And we're going to talk most of the time about these amnesty programs and the rest of our time. And on this slide, you will see the different programs that are out there. The first, let's see, the last two are not really the amnesty programs, but the rest of them are. So the top 5 are. So the first one, we'll talk a little bit about each one of these, but there's an IRS criminal investigation disclosure practice. So this is the criminal investigative unit of the IRS reviews your case in this. There's certain relief procedures that are offered for citizens who also intend to relinquish their citizenship if they meet some very strict guidelines. There's the streamlined filing compliance procedures, which are probably the most well-known out there, the buzzwords a lot of people hear about. There's the delinquent Fbar filing submission procedures, which is a great program, and we'll kind of go into the details of all these. And then there's delinquent international information return submission procedures. That's a mouthful. DIIRSP is what the acronym that people use for it. Then there's just the normal way, the IRS examinations to appeals and criminal cases that, these are ways you can go through to mitigate risk. And we'll discuss a lot of these different programs. So, too far. Okay. So who can participate? And all U.S. taxpayers who are required to file a U.S. tax return and disclose foreign financial assets or file other foreign disclosures may be able to participate in these. So what are U.S. taxpayers? U.S. taxpayers are citizens, U.S. residents or green card holders, so permanent residents, or they meet the substantial presence test. And sometimes U.S. entities, and depends on the type of program that are out there, are the people who can participate in this program. So I'm going to talk a little bit about who U.S. taxpayers are. U.S. citizens and green card holders, that's pretty clear. What is a resident of the U.S.? And that's a permanent resident or green card holder, or you meet the substantial presence test. So what is the substantial presence test? Really quickly, the substantial presence test is the tax code, or how the IRS determines you meet residency for filing requirements. So basically what that is it's a 3-year look back rule. So in the year that you're trying to determine residency, if you spent at least 31 days in the US in that year, that's rule number 1. You have to have at least 31 days in the US to be considered in the year you're trying to determine residency. to be considered resident. If you met that, then you move on to this look back rule, and you look at your US presence over the last 3 years. So you look at that current year, so the year in which you spent 31 days at least, you count up 100% of your days in that year. Then you go back the year before that, and you take 1/3 of your days in the US in that year. And then you go back the year before that, and you take 1/6 of your days in the US. So using this formula, 100% in the current year, 100% of the US days in the current year, 1/3 of your days in the year before that, and then 1/6 of your days in the year before that. If the sum of that adds up to 183 days or more, you are a tax resident. You meet the substantial presence test. Now, there's ways to get out of that using tax treaties and other, we're not going to talk about, but you know, if you're trying to figure out if you qualify, you know, and a lot of these rules of filing some of these forms hinge on these same tests. So if you are a non-resident of the US, you generally don't have to file like the Fbar forms, a lot of these international forms. There are exceptions to that rule though. And then just on the US entities section, I won't just want, so the Streamlined program, which is probably the most popular one on here, only individuals or estates of individuals are eligible to participate. And some of the other disclosures are for entities and partnerships and trusts. All right, now for the specific programs. So I'm not going to get into a lot of details here because with this one, the IRS criminal investigation disclosure, if you qualify for this, so really what this is for people who are more willful and they're afraid or fear of criminal prosecution, or so they're more willful in their failure to file these international forms. The interesting thing about this program is you have to have pre-clearance from the IRS criminal investigative unit in order just to participate in this program. So you have to submit a pre-clearance request disclosing certain information just to be allowed in the program. So if you're really wanting to be part of this program, you're kind of showing your hand a little bit to the IRS, and so you got to really be serious about this. You got to be kind of afraid that you could be prosecuted criminally in order for this to really be applicable. And most people we deal with aren't like that. But all right, let's go to the next program. So IRS relief procedures in order for those who intend to relinquish their citizenship. So there are ways for people who are US citizens and green card holders to give those up so they don't have to file returns. Those are kind of discussions you'd want to have with someone like Ben or myself and what that looks like. And there's potential exit taxes and all that are applicable. This particular program are more for accidental US citizens. And what I mean by accidental, meaning maybe they've lived their entire life in a foreign country and they didn't know that they were a US citizen. Maybe they're a US citizen by birth. One of their parents was a US citizen and they didn't ever file returns. This is a program that's out there for them to come clean and to relinquish their US citizenship in one fell swoop, meaning they wouldn't even have to get a social security number. If there's tax due on their US tax returns, they wouldn't have to pay it. And so this is a way for them to do it. But there's a lot, as you can see from this slide, there are a lot of restrictions on being able to come to do this. the Streamline, there's two iterations of the Streamline program. There's a foreign and there's a domestic. And so this is the foreign one that we're going to talk about. This program is designed for people who haven't been filing any those international forms, which we've been discussing, and they haven't been filing those forms, and they have unreported income from those foreign assets that they're failing to disclose. And so this is an informal process. So unlike the first one, the criminal investigation, you have to ask the IRS to be allowed into the program. This one you do not. You just send in your filing, and you wait to hear back from the IRS. And really, no news is good news under the Streamlined program. So what is the difference between Streamlined Foreign and Streamlined Domestic? The first thing is this 0% penalty. So if you are considered a foreign person, and how do you determine foreign person? It's by looking at the physical presence test by the IRS. So in a 365-day year, were you present out in the US for more than 300 or more than 35 days in that year? So you can't be back in the US for more than 35 days in order to be foreign. So if you're coming back and you have a presence here and you're, over the Streamlined period, you would be considered if you wouldn't be eligible for this foreign. You'd have to go to the domestic program. There's a 0% penalty for this being in this program. So basically the IRS is saying, we're going to be more lenient and not assess a penalty by being part of this program because you live outside the US, because you're a foreign person. Maybe, finding a good reputable accountant to help you with your filing is a little bit harder, and we're going to give you a little bit of leeway there. And the filing requirement to come clean is you have to file 3 years worth of returns. That could be originally file returns, meaning you've never filed a return to begin with, and 6 years worth of Fbars. So this is a really great program for people who qualify for it. Streamlined Domestic, instead of the 0% penalty, there's a 5% penalty. And the way that is calculated, so in that 6 years of Fbar filing, you list out the maximum. So each year you list out all of the unreported foreign assets that were not reported, and the maximum or the value of those assets on the last day of the year. And the year that the bulk of all of your assets peak, so let's say in 2020, my unreported foreign assets was $1 million, you would have a one-time 5% penalty on that $1 million. And that's how that's done. So on the Fbar foreign, you have 0% penalty. The domestic, you have a 5% penalty. The key to also another thing to consider here is you have to have filed prior year returns to be part of this program. So you had to have filed a tax return. You can't have not filed, or you don't belong. You're kicked out of this. You wouldn't belong in this program. So this is another really great program, but this can seem a little, especially if you have a lot of unreported assets. This 5% penalty can cause a little bit of angst on people. So that leads us to our third polling question. So what is? Oh, go ahead, Ben.
I was going to say the weirdest thing about it is that if you reported your income, you can't do the program. Right?
Yeah.
That's always the weird part when we deal with people. So Polling question is, what is the streamlined penalty filing under the streamlined foreign procedures?
Yeah.
It's not 27.5%. Thank goodness.
No, I know. There was an old program that used to have that. It is called the Offshore Voluntary Disclosure Program. It was designed for more willful people. So, anyways.
Well, most people got it wrong, right? This is the foreign one, so it'd be 0.
Yeah.
Yeah, and everybody asked us about that, the OVDB, but it's gone.
Yeah.
So this is kind of the part where we explain how does this work, right? How do you choose where to go? Well, one, like it has some strict definitions to fit into those things. One, you got to be foreign. One, you got to be domestic, and you can't have reported your income, which is we run into a lot of people that don't know that they should have reported, but they reported the income. They don't know they should have filed all the forms, but they did report the income on the return somewhere, maybe not in the right place, but they reported it. So we have sort of analysis that we do, and it's getting more complicated. It's this kind of non-willful or willful, because that kind of decides whether we're going to send you to a criminal route or, and most of the time, nobody has all 100% of the factors in there, but it's kind of hard to keep track of. So the IRS says, well, it's conduct that is due to negligence, inadvertence, or mistake, or conduct that is the result of good faith understanding of requirements of the law. This is non-willful. And then when it comes to willfulness, it's it's when you've knowingly violated a legal duty, recklessly violated a legal duty, or you acted with willful blindness by making a conscious effort to avoid learning about a legal duty. So what does this mean? So we have this case that we like to talk about. The IRM has sort of those statements that I just made, but it's in this Williams case, it's kind of a threshold case here because it's where the court started to define willful blindness, and there's been other cases after that. So some of the situations that kind of trigger it is well, there was one taxpayer, Williams, who had these filing requirements, and he did go to some advisors once he figured out that he wasn't filing timely, and then he said, well, hey, let's fix this, but it takes a long time to fix some of these things. And so you have to get the information together. Records aren't always available. It's not always handy. So he waited a while. So he filed some returns that had requirements on them, and he knew that they did. But he didn't have the information really readily available to do it. And so the court said, well, I mean, you were willfully blind. You didn't know exactly, and your advisors were trying to figure out what you needed to do, but you knew that there was something and you just didn't file it. So that can be a problem. So we try to avoid that situation as best we can. We're trying to get all the information together and file and avoid that situation. But first thing you do when you come to us is we're going to analyze whether you are willful or not. And so you'll be surprised. There's just a lot of facts that people assume. A lot of times people will assume that, well, it was this was just my retirement account from a job I had for only a few years when I lived in the UK or whatever. And they don't realize that, they just think of it as like any other retirement account that's not taxable, right? In the United States, you don't report what happens in your 401k, right? So then they make assumptions like that. Those are the things we have to analyze, and then kind of what you knew. And like I said, it's getting ripe where the IRS thinks you should ask, right? And a lot of times people are not asking, because even tax TurboTax will ask you about questions about your foreign holdings, and so it's hard to escape it now. So you got to have pretty good reasons. So that's kind of how that goes. That process goes. It can be very nuanced. So then these are the kind of the things you want to consider. So, we're always having these arguments back and forth with the IRS. What was their actual knowledge? And we talked about that. What's very difficult is when you have conversations with even a financial planner or something that indicates you knew you had this, but you just didn't want to look into it. What did you do when you kind of had an inclination, right? That why did you ignore it? what happened after you had that inclination. And what's the source of the funds? I mean, this is a big deal. Like if it was a non-taxable type of account, that can be helpful. But when we're trying to avoid the penalties, and did they just now we talked about they'll interview your preparer. Well, this is the reason why, because a lot of times we use a defense that they relied on the advice of a tax preparer. Someone prepares their taxes and they didn't tell them that they had a requirement to file, but the question is whether or not you told them about it. So you have to make sure there's full disclosure. Now, of course, there's that issue that we just talked about. You can't qualify for the domestic Streamlined if you reported your income, but it's a good fact most times that if you actually reported it, you might not qualify for that program, but it helps us on the penalty side of things. Then once you knew, what did you do? That's a big deal. And what were the affirmative acts? Did you get advice? Did you seek someone out? You find out your preparer wasn't that good. You need to go to someone else. And especially don't conceal it, right? Don't take any acts to conceal it. So pass this back to Jared, though. We'll talk a little bit more about some of the things you can do to mitigate your problems.
Yeah. So the willful, non-willful discussion is very relevant for those two programs, the streamlined iterations of the program. And so those are requirements to file under the streamline. Is you have to be non-willful. So those factors that Ben just discussed is very pertinent with those for those amnesty programs. The other one, so we have two more that we're going to talk about, amnesty programs we're going to talk about today, and we're nearing the end of our time as it is, so I'll try to be brief, but this is one of the better programs, the delinquent Fbar filing procedure options and requirements. So this is for, it's designed to accommodate taxpayers who don't need to file under the CI disclosure or the streamlined programs, meaning maybe they've been reporting all of the income from their foreign assets, but they just didn't file an Fbar. Ben talked about earlier the statute of limitations for an Fbar is 6 years. So under this program, you file up to 6 years worth of delinquent Fbars. If you've never filed it, but you've filed all the income, therefore you don't qualify for the streamlined program, then you could file under this delinquent Fbar. It's really an easy program. It's very minimal, like cost-wise, for us to kind of help if you qualify for this. There's no penalty. You just file those delinquent years. The requirements are you can't be under civil examination or criminal investigation by the IRS. And you've never been contacted by the IRS about delinquent Fbars. And obviously that you've paid all the tax on the income from those assets. So it's really kind of an easy program. It's a great one. I filed many under this program, and you usually just file it and you don't hear anything back from the Department of Treasury from it, and or the IRS. And so it's actually a really good program. This next slide is so this is the one that's kind of the mouthful, the delinquent international information return procedures, submission procedures. So DIIRSP. And so this is designed also to accommodate taxpayers who don't need to file under the CI disclosure or the streamlined programs. And that you have a reasonable cause for failure to file the international forms. So what a lot of times is, so one of the times I see this the most often where this is needed is one of the requirements under the delinquent, under the streamlined domestic, is you had to have filed prior year returns. So let's say you have your situation where you're non-willful in your failure to file, but you haven't filed and reported income on foreign assets. like Fbars, and you haven't reported the income from those foreign assets. So you're a perfect candidate for the streamlined domestic. But the one thing is, not only did you not file and report those assets, you just never filed a U.S. tax return. This is where this program would be ideal. And so basically what you do under this program is you just file the delinquent return with the delinquent international forms, and you may submit with that submission a reasonable cause statement with it. The IRS doesn't really require you to attach it. A lot of times I think they may just disregard it. What we find is they'll come back sometimes and ask, they'll issue you a penalty on this. So if you look at that second to last bullet point, during this is from the IRS instructions on this process, on this program, during the processing of delinquent information returns, penalties may be assessed without consideration of attached reasonable cause statement. It may be necessary to resubmit reasonable cause statement and correspond with IRS regarding specific correspondence. So you may attach a reasonable cause to this filing, and you may have reasonable cause. Maybe you qualify for the streamlined domestic, but why would you pay a 5% penalty if you receive maybe bad advice from a tax professional that told you you didn't need to file those forms? And so this would be another reason for this form, for this filing. You may have a really valid reasonable cause statement. But what the IRS is saying here is they just may disregard that reasonable cause statement and send you a penalty anyways. And this is where Ben and I were talking about the abatement of those penalties. These penalties that they've been issuing, just computer generated penalties, sometimes generate from this. And then you have to wait years sometimes to get through the appeals process for the IRS to abate those penalties. So what does the client do? What does the person do in the meantime when they're getting all these collection notices for penalties? In the meantime, do they pay that penalty, or do they just keep going through the appeals process and disregarding it, trying to put a stop on the collection notices? And this is really kind of a tricky area. I would try to guide someone away from this program if at all possible. But there are reasonable situations where it is applicable. But this last note is an area that's caused a lot of angst with tax professionals and attorneys, and has deterred a lot of people from filing into this program because of that penalty issue, and because of how unresponsive the IRS has been through the appeals process and getting penalties abated. So anyways, that leads us, we're up on time, but that leads us to our next polling question.
But hopefully that announcement by the IRS will alleviate some of that, both sides.
Yeah.
Right, and we can all catch up.
Yep.
Have you ever filed under one of the IRS prescribed amnesty programs discussed during this presentation? Last polling question. I don't see any other questions. Right, Amy, am I seeing this right?
I don't see any other questions either.
Well, feel free to email us, or if you have any other thoughts, or if you run into someone that has any of these issues, so we can help out. It can be very stressful, and some of the penalties they are outrageous. So people get very scared about it, but if you aren't willful, there's a lot we can do. If you're willful, then we'll try to make sure you don't go to jail. Right, sure.
That's right.
Do our best.
Anyway, yeah, thanks everyone for being here, and hopefully this helped. And yeah, like Ben said, let us know if there's any questions.